Live for February 15th. Thank you for joining me. And again, I'm here with my friend John Ulzheimer, formerly with Equifax and FICO. John, welcome. Good to see you.
Put a hoodie on for you.
Oh, I like that. You know, we're sporting our sweaters today, so I'll wear my hoodie. I'll wear my hoodie next time. I almost wore a hat today because it was feeling like a hat day to me. So, all right. So what do we got here? So we'll wait a minute or so for people to jump on, and for everybody that's with us already. John and I were just talking about a big credit seminar that takes place every year called Credit Con. This coming year is going to be in New Orleans. So we're just talking about New Orleans. It'll be a first time for me. How many times have you been in New Orleans, John?
I have been to New Orleans about a half a dozen times. Actually, tried to meet me to New Orleans.
Oh, really?
Yeah, when I was at Equifax, my last job at Equifax was in Jacksonville, Florida, and I was handling the relationship with Equifax and the formerly known Barnett Bank. And unless you live in Florida twice years, I have no idea who Barnett Bank is. But they were like a really massive bank in Florida. Well, when I moved there, they got acquired by Nations, which also does Nations Bank is now acquired by America. So when Barnett Bank got acquired, there's no Jacksonville anymore. So Equifax trying to figure out what to do with me, and they offered me a similar role in New Orleans to take over the Hibernia Bank relationship. And my wife was like, no, we're not doing this.
Not gonna happen. Is that how you settled in Atlanta? Because I know the big headquarters for Equifax is out there in Atlanta.
Well, I've been in Atlanta.
Oh, I didn't know that.
Yeah, I've been here 44 years, 9 months ago.
Oh, gotcha. I thought you ended up in Atlanta because after college, I know that was. Oh no, it was FICO that gave you your first job, right?
No. I ended up. My dad was stationed here in the '79. That's how. My first job out of college, what I call my first real job out of college, was with Equifax with FICO,
and then FICO.
Etc.
Gotcha. Okay, that makes sense. I had to get the order right. Okay, well today, and we'll see some people jumping on. By the way, everybody who's jumping on, I see we got a small group. Thank you so much for being here. Take a second, introduce yourself. Let's see, who's this? Getting bad feedback from. Oh, thank you. Just did a software. How's that? When John talks again, let me know. We just did a software update on what I'm using to live stream, and I forgot to put the echo cancellation on. So.
Testing. Hello. Is my echo still bad? Hello.
Is that better? Yeah, everybody's saying we have an echo. It should be solved by now, but I don't know. We'll just roll through it. So take a second, introduce yourself, say hello, and if you still hear some echoing, oh, she said it's much better. Okay, thank you so much. Yeah, that's my fault. I forgot to push that button on there. Seems like every time the software does an update, everything is reset back to factory standard, and I got to go through and customize everything again. Okay, let me put some names up on the screen here. We're getting a good group joining us. Yep, Mr. C. Thank you very much. I think we've got it taken care of now. Rick, welcome. Texas. Okay, good. All right, we've got a nice little group here. I see some people jumping on. Take a second, introduce yourself if you like. Welcome. And what John and I do, if there's anybody here that's new, I see some names I don't recognize, but then again, I don't remember everybody that comes on. But the way that we do our Q&A live is we typically stick with a subject that we talk about for a minute or two or more. And then really the Q&A is all about you. Whatever you want to talk about. John is our guest expert, the most knowledgeable person that I know in the credit space. Formerly with Equifax and FICO. So, I mean, you got pretty much all your bases covered there. If you want to know how credit bureaus work, if you want to know how scores work, he's your guy. Okay, so fire away with questions. If you're new to Creditversio, your first week, been here for a while, doesn't matter. We typically don't do credit repair questions on the call with John. This is more about credit education and how things work. So try to keep your questions limited within that scope. But if you just got to ask, go ahead, post it up there. I might not put it up on the screen. I'll swing back around a little bit later on and answer it for you. Okay. So, John, we were going to get started today talking about, and only because this came up a couple of times this week, and one of the occasions was what I was just telling you about before we went live, which was a credit repair company asking me a question that's really common with the belief system of most people who are out there trying to do some repair, some disputes, whatever it is they're trying to do to improve their situation. So I thought you would tell us a little bit about how the dispute, or what goes on behind the scenes when you submit a dispute, because that's where, as you know, there's just a lot of myth. And we'll address some of these myths as we go through, but really the process of engaging the bureaus, challenging information on your credit report, that's what you choose to do. Probably one of the, arguably, at least in my opinion, the best formats is the printed letter, but you certainly can do that online too. So let's just, for the sake of this conversation, let's just stick with the printed letter. What goes on behind the scenes? I create my dispute letter, I send it in. You used to work in dispute management over at Equifax. Give us a walkthrough of what takes place.
Yeah, and I always tell people that not much has changed except for maybe the color of the paint on the wall and the carpet.
Yeah, right.
There's a little bit more than that has changed. It's a little bit of sarcasm, but still kind of true. So essentially, and I think you're right about the printed version for a couple of reasons. Number one is you don't have to choose from a drop-down menu of dispute options. If you're writing a letter, you can say whatever you want to say in your letter. You're not limited to some pre-selected choices. That's number one. Number two is, back in the day when you actually could call a credit bureau and verbally file a dispute, which you can still do, but it's certainly not as common as it used to be back when I was with the bureau. Two people having a conversation with each other, there's always room for misunderstanding. Not so much with the letter. If the letter indicates, look, this is not mine, or look, I made all my payments on time, there's no way that late payment's accurate. There really is no room for misinterpretation or something like that. I do like, and plus, I don't know why this is a common thing, but I do see a lot of credit repair companies and plaintiffs' lawyers suggesting that disputes are sent with via registered mail with a return receipt requested, and so obviously you can't do that if you're sending something online. So anyway, those are just some of the reasons why I think that the paper option is still a better option. So number one is you send your letter to a credit reporting agency, and hopefully your letter is clear, because the credit reporting agencies are not required to read minds or infer the meaning of your dispute letter. So make sure that your letter is clear. And what essentially happens is the bureau will then pull up your credit report and they will log the item as being in dispute, meaning that they essentially place some sort of indication on the item that it's being disputed, and they generate a dispute form. That form is called an ACDV, or an automated consumer dispute verification form. Prior to it being automated, it was just called a CDV, a consumer dispute verification form. And that form includes your personal information and all of the information about the account or collection that is on your credit report, and the information that you're disputing. So in other words, are you disputing that it's not yours? Are you disputing that the balance is wrong? Are you disputing that it was caused by fraud? Whatever it is that you're disputing, all of that information is captured in that form. And then that form is delivered to the furnisher, which is usually a financial services company or a debt collector, via a system called eOscar. And eOscar is basically like just essentially a phone line. So it communicates between the credit bureaus and the companies that furnish information to them. And the person who works for the furnisher, sometimes they're referred to as dispute analysts, they will log into their eOscar account, and then they will see that they have dispute forms waiting in queue to be quote unquote worked. So they will essentially pull up one of those forms. You'll see exactly everything that I just described. The name of the consumer, information, the personal PII, the personal identifying information about the consumer. They already work for the lender, so they already know what type of account it is. You're not going to send a Bank of America dispute to American Express and a Citibank dispute to Discover. So Discover disputes are going to go to Discover. Bank of America disputes are going to go to Bank of America. So they're going to end up with the correct furnisher, but they'll be able to see what it is that's on the credit report with respect to that particular item, and they'll also see what it is that you're disputing about the item. So they now have an obligation to perform an investigation, and so let's say that the balance is being disputed. So we'll pull up in their system, we'll see what the current balance happens to be at any given time, and then they will, if the balance on the ACDV form is wrong, then they will correct it. And the way they correct it is, remember I said there's a whole section that shows what's on the credit report? Well, there's an entire section on that form for changes to be made to all of those things that are on the credit report. So there's what's on file, and then there's the response portion of the form. And so if you're changing things like balances or dates or late payments or whatnot, or statuses, then you make those changes on the same form, and then you click, then magically zip it back to the credit reporting agency, back on the same form via eOscar, and then the credit reporting agency gets it. They will make any sort of changes, perform the maintenance on the credit report as necessary, and then they will send the consumer the results of the investigation. And they have 30 days to do this. But according to the CDIA, the Credit Bureaus Trade Association, that process that I just described takes 10 to 14 days on average. The last good thing about the letter, David, is the letter is sent as an attachment with the dispute form. And there is a requirement on the furnisher side of the equation. They have to either open it or download it. So they can't ignore the attachment. They have to do something to indicate that they've either viewed it, like by opening a document in an email, or they have to download it, which means that now they have the document.
So let's say you got a letter in your
consider that information.
Yeah. Now the letter could be evidence of the dispute. It could be forms provided. Could it be the entire? Well, I'm assuming it would be the entire. Let's just say you send a dispute letter to Equifax, and in your dispute letter, you're disputing 5 different accounts. So, and one of those accounts is, say, American Express. So American Express opens that letter. They're going to see the disputes for everybody else, including the American Express account, and whatever information is also included in that letter.
That's exactly right. Yeah, they're going to see the whole. They're going to see the whole attachment. It's not going to be segregated or redacted only to their particular account. They're going to see the whole thing. If you don't want a furnisher to see that, then you're going to have to send 5 separate letters.
Yeah, actually, that's going to go into one of my next points, and I think it was I might have had Steve on here, Steve Rieger, just the two of us. I might have had you on at the same time. This is going back a ways, but one of the things that Steve said is it was a question that we get asked all the time. Is like, hey, should you put, let's say you got 3, 4, 5 things that you want to dispute at the same time or more, depends on what's going on with your credit report. Should those all be separate letters? And Steve, his response was, and I'll get your take and the reason for your take. Steve was like, no, he goes, put it all on one letter, at least as far as we're concerned as a bureau, because, if you send it a bunch of letters, it sort of looks like you're trying to game the system a little bit. But just if you have 4, 5, 6, 8 things to dispute, just put it on one letter so we can process it all in one shot under your name and information that you provided. So, but yeah, you make a good point. Like if you're doing it that way, to the extent that it even matters, the data furnisher who's working the dispute is going to see the disputes that you have with everybody else. But I mean, does that matter when you've got chances, high probability of that person going to be someone who just doesn't really care, that's in India or Philippines or South America or something like that?
Well, so my experience is that if it's an authentic dispute, then the consumer doesn't really care. But how many times, this is a rhetorical question. How many times have I seen dispute letters sent to one furnisher that included the exact same verbiage for 10 other unrelated items. Doesn't belong to me, caused by fraud. Doesn't belong, but they're all negative. So
Yeah.
it's pretty clear that you either have someone who's pretty unlucky because they're a horrible victim of identity theft, or you got someone who's trying to lie and get stuff off their credit reports under the guise of being a victim of identity theft. So, to the extent that you're okay with everyone seeing that, then send it in one letter. If you don't want, to crisscross or transcend furnishers with your dispute letters, and you're going to have to send everything separately or file. Send one letter, do one online. Again, you can contact the credit bureaus in a variety of ways, and you don't have to do it all the same way.
Yeah, yeah. No, that's a really good point. I never really thought of it that way. Yeah, speaking of identity theft, yeah, that's one thing that we're always very careful to advise people of. Even when it's a selected option in Crediversio, it's like, hey, there's a little pop up saying, don't use this unless you've got a police report or you've got something that verifies that you are legitimately a victim of identity theft. And we don't go into the details as to why. I mean, we should have to explain it, but I mean, that's nothing good comes from claiming identity theft when there was really no identity theft.
Yeah.
And it happens. I had it happen to me a long time ago with ex-girlfriend who was my mortgage broker. She had all my information. Decided to put some utilities in my name that I wasn't aware of. So things like this happen from time to time. So what are we about? Not too far into the live, about 15 minutes or so. We got a pretty good group watching. Please take a second, drop us a question if you like. John will just continue talking about what goes on behind the scenes in the dispute process. So here's some things, John, that you've probably seen this because it's been a spell you worked over at Equifax. I remember early on when I got started in credit repair, because we just didn't know any better, which is the case with a lot of people in the space. We would tell people like, listen, you got to write your letters by hand, and we used to use these hand fonts. I don't know. I'm sure they weren't fooling anybody. I got a quote that you gave at one of your seminars a long time ago that floored me. And I'll rehash that one in a second here. But there's a lot of tactics that people think are going to be effective, and we get these as questions all the time in Crediversity. It's like, hey, do you guys, do you do this in blue, or should I sign this in blue ink or black ink? Should I staple the dispute letter? All of these things. And I remember when we were at a credit cohort. God, this is probably 6-7 years ago, I guess. And one of the funniest things, and it was enlightening. I was glad to hear it. Was like when we were talking about your days at Equifax when you were in dispute resolution. They're like, hey guys, it was all credit repair people for the most part. There was a couple exceptions here and there, maybe some attorneys, but mostly it was us credit repair people. And he said, you guys have the bigger companies. You send your dispute letters in that big mailbox, and the mailman comes and picks it up. And we're like, yeah, that's exactly what happens. Mailman comes every day, and we got a big crate. They got to, we send the dispute letters. You go, yeah, they pretty much come in like that too. And he goes, we know they're all coming from you. You're not fooling anybody. We just put them up off the side, and we know they're credit repair companies. We're going to process them, but you're not fooling anybody. I just thought I got a big kick out of that. I thought that was funny because I always had these doubts, like I don't think we're fooling anybody with these letters. But anyway, let's talk about some of the myths that are pretty popular. And like for example, one would be should dispute letters be written by hand?
Well, certainly they're more easily. I mean, look, I have horrible handwriting, horrible penmanship, so I would always type. In any communication I have with anybody is generally going to be typed. So, but again, to the extent that you're writing and someone can understand what you're writing, then it doesn't really make a difference. That's one of this whole issue of red ink or blue ink or black ink or
well, remember too, send your letters in yellow, print on yellow paper so that the OCRs can't. That's the optical character recognition machines that bureaus use. That if you send in yellow paper, they wouldn't be able to read it or something.
Here's my. So what?
Yeah.
Is that making, what has that improved? How has that tilted the playing field on behalf of the consumer if a person in India is key typing in your dispute versus a optical character recognition software is entering? I'm just curious what people think has happened that has somehow changed the calculus of the dispute. The dispute form is still the dispute form. It's
Well, they don't. I think they don't know that. I think what the belief is that they think that this is an entirely automated process, and what you really want is a human being to pull the letter off the conveyor belt and read it and handle it themselves. I think that's what the impression is. And before we continue, Mr. C, who's got that question about freezing reports, I'm going to put that up in a second, but I just want to finish this thought with John. But but yeah, John, I think that's really what the belief was. Is that, well, I got to get somebody to read this personally.
which is fine. I get it. I mean, if you spend time writing a letter, you would like someone to spend time reading it. That's a completely reasonable. Expectation. But if anyone is suggesting that a handwritten letter versus a typed letter versus red ink, black ink, blue ink, yellow paper, stapled, unstapled, folded, catty corner versus die, if anyone suggests that any of that stuff changes the likelihood of your collection being deleted versus not being deleted, they're lying to you. That stuff it doesn't move the needle at all. And here's why it doesn't. All of the stuff that you send to the credit bureau, it doesn't matter what color or what parchment, none of that matters. It all gets homogenized right down onto that dispute form. And that dispute form is the same dispute form that is sent millions of times every single year to all the credit reporting agencies. And so your black ink, red ink, staples, whatever, none of that stuff changes the fact that it's the same exact dispute form that's being sent to the furnisher. The furnisher doesn't care if something's on yellow paper. They're not the ones who are responsible for scanning something or OCRing something. All they're concerned about is what's on the dispute form, and if they and then reviewing the attachment. And if, to the extent that it's in red ink or black ink, it's scanned anyways, and I'm pretty sure it's in black and white, so you can't really tell what color ink it is anyways because it all looks black. So I sometimes people don't like it when I talk about this stuff because people try to sell products and advice to consumers, and this is part of their product and advice. But and there's nothing to it. It doesn't change the likelihood of you getting something deleted from a credit report. It does. If it's wrong, the chances are pretty good that it's going to get deleted or changed because the furnisher. Yeah, the furnisher, if it really is wrong and the furnisher has a record of it being wrong, then they have an obligation to correct it everywhere across all three bureaus. But I can tell you in 31 years, I've never heard of a collector or a bank or some sort of a credit card issuer saying, man, we got a lot of disputes on yellow paper and we just had to delete all of this. We didn't know what to do, so we had to delete all the late payments. We had to delete all. We should come up with a skit at CreditCon, the dumbest comedy one-liners. I'm like, oh my God, the yellow paper. We had to delete all the collections.
I know. We got to have a big red button. Just delete it all. I know. But the thing is, people would get mad. I mean, just imagine what they would do because people got upset that we completely debunked the Metro 2. That, that I'm sure we'll have some excitement with that at CreditCon. Okay. Mr. C, let's throw this up here. I love this question. What do you guys think about freezing your LexisNexis, SageStream, etc. before sending your dispute letters? I've seen some YouTube videos where the person recommends this. Of course. Mr. C, I was just having this conversation, not even 3 hours, not even a conversation. It was an email that I had to send to somebody who has a pretty sizable credit repair company that was asking about Crediversal. It was like, do you guys recommend freezing your LexisNexis and your SageStream and getting rid of old addresses and so forth? I'm like, okay. I mean, this is where we still are. So, John, I know you've answered this question a million times, but let's make it 1,000,001.
Yeah. So you certainly have the right to place a security freeze on all those systems. I mean, there are consumer reporting agencies, and consumer reporting agencies have an obligation to place security freezes if the consumer asks them to place security freezes. But the purpose of the security freeze is to prevent unauthorized access by lenders. So if someone applies for credit fraudulently in your name, the security freeze doesn't have any influence at all over the dispute process, none. So if you think that LexisNexis isn't going to verify your bankruptcy because you've frozen something at LexisNexis, that's wrong. If you think that some bank isn't going to pull your SageStream credit report because it's frozen, then that's a possibility. You'd have to thaw the SageStream credit report in order for the lender to be able to pull it. And if you choose not to thaw it, then they're going to deny you, and then they'll send you an adverse action notice indicating that you're denied because they couldn't pull your credit report because it was frozen. So, but if you think that somehow it's going to cause all this stuff to fall off your credit reports, that's not the practical impact of the security freeze. It doesn't bleed over into the dispute resolution process like that.
Yeah, the bureaus. So, but Mr. C, that's a great question, and in fact, I see that on. We have ads and posts for Crediversio that are coming up on 3 years old where we have thousands of comments. And I've seen threads on there where people are like, hey, I don't understand. I keep freezing my LexisNexis and SageStream, but somehow they're able to verify the bankruptcy. And
first off, you don't keep freezing anything. Freezing is, it's set it and forget it, right? It's like that Ron Popeil infomercial about with the little oven that you have. You don't have to freeze it and then freeze it again in a week and then freeze it again in 2. When you freeze it, the security freeze stays on until you thaw it. And the only reason you would thaw it is because you're about to apply for credit and you need the lender to be able to get access to that information.
I just think I worded that not correctly. I wasn't saying that someone kept refreezing. What I'm saying is there's lots of people that I've read in the threads that are saying, hey, I froze my LexisNexis and SageStream, but I don't know how they're able to verify the bankruptcy. Shouldn't it come off? And this is a real common thing. And one of the problems, Mr. C, is that you're going to see that all over the place on YouTube by people who see. I would say 99% of people who are in the credit repair space, who are either influencers or have some kind of marketing campaign, they have never spoken to anybody like John. They've never spoken to anybody who worked at a bureau or worked for FICO or worked for VantageScore who can say, listen, let me explain to you how things really work. So when you have these unchecked ideas, they just spool out of control and they just become part of the language where people think that that this is the stuff that works. And the other problem, and I got into this a little bit, John, on my last live, and I realized I was getting a little bit too into detail, but you can always tell that when people say this stuff works, they've never taken a statistics class in their entire life. And that's not a dig, but if you don't understand basic principles of the law of large numbers, meaning you can't say something really works unless you have a large data set to compare it to if you're doing A/B testing. So like nobody is saying like, I've tried this and this works. Well, it might have worked, but like John, one time you said when we were kind of bashing the Metro 2 dispute letters, you said, one of the things you said that I thought was perfectly poignant was, you could have just sent a letter that said, I don't think any of this stuff is mine, and you probably would have gotten the exact same result as this long, complex Metro 2 letter, which ultimately what the processor probably did is to say, I don't know what this is saying, just verify all items.
That's right.
But that's not.
There's a difference between coincidence and correlation. They're
exactly.
Not the same, right? So if you write your dispute letters in crayon on a piece of paper and it's legible, then someone has to process it. Will it result in a deletion? Possibly. Does that mean you should write all your dispute letters in crayon? If you'd like to, but you don't have to, because that's not why something got removed. That was a coincidence. There's a difference between coincidence and correlation.
Right. In the coincidence, you may never know exactly what was behind that. It could have been legitimately been wrong. The data furnisher might not have been able to verify. Who knows what happened? But it's not. But these things are not real strategies. So Mike, see, the reason why we're kind of going through all this is to let you know that yeah, you can freeze that for security reasons, but the relationship that the bureaus have with LexisNexis and SageStream is a B2B relationship. It's a contractual relationship. So there's no freezing is going to prevent them from engaging in the nature of the relationship that they have contractually. So anyway, that was my rant on how some of this stuff gets how it just perpetuates through the credit repair space. And I can't tell you how many, I don't know how many videos, John, I've seen where people are like, okay, let me show you how to freeze your Sage Stream and your LexisNexis, and this is why you want to do it. And it doesn't work that way. But listen, they get any amount of success, then it works. So I had a guy the other day that was telling me about their strategies, and I said, well, if you want to create a dispute, just create a dispute based on the truth, very clear language. And if it's legit, it's legit. It'll come off. It'll come off. But I said, you can't tell me that any one method is some super secret method, because if it's there, then show me a data set with 10,000 results tried different ways, and then tell me it's really delivering a result. And I promise you, you're not collecting the data. And if you did, it wouldn't say that. So anyway, we can probably move on from this one. Okay. Clearly somebody is entertained. Yes, you're very welcome. All right. Any other questions about this subject matter? All right. What do we got here? 31 minutes or so. All right. John, curious, what are you going to be talking about at CreditCon?
Yeah, so the way I normally do those is I wait as long as possible before I give Matt. Actually, I don't ever give him my the name of my sessions, because I don't know what I'm going to be talking about usually until a few days beforehand. And
okay.
even then, because you know how stuff changes so quickly. I mean, something may happen in 2 weeks. It's a really big deal that I'm gonna, if he's gonna want me to talk about at CreditCon. I suspect we'll talk about kind of trends, like the current trends in FCRA, which I talk about every year, and it's always great because the trends are always different. So we'll probably talk about some trends. We may talk about FICO 10 and FICO 10T and VantageScore 4, since FHFA made their announcement a couple of months ago, and now that's something that is a real thing. And so instead of talking about it, kind of in a speculative manner, now we're talking about it in a real manner. So we'll talk about those two scoring systems in a little bit more depth. But what I also do, David, is, which is why I don't like speaking early in the first day. I like to maybe be midway through the afternoon on day one. Is I like to hear the questions that are coming from the audience, and that gives me an understanding of just how sophisticated the level of understanding of the industry is. And so if it's pretty sophisticated, then I know that I can present certain topics and present them a certain way. And if the questions indicate people are maybe they're newer to the industry, or they don't have a kind of the same lengthy background, then I'll know that I may pivot to a different topic or present it in such a way that's maybe more digestible to someone who's been in the industry for only a couple of years versus someone who's been in the industry for 15 years. So I don't really know, because I tend to adjust that even up during day one.
Yeah, that's great just to go on the fly like that and react to what's going on with the audience. Because last year, what you and I talked about, it's like how new the faces were.
I noticed that also.
Yeah, it was pretty.
And there are a lot of angry people last year. It was weird. We did two of them. One was in Dallas, and people weren't quite as angry. But the one in Vegas, people were mad, and I don't know why. But there were a lot of pissed off people there. So, um, it is what it is.
Yeah.
It's
Well,
less it's less fun when you're around a bunch of angry people, but
yeah.
um,
Yeah, but there's always you go there for the group who are really eager to learn, and that's always a good thing. And there are a lot of new faces there that really appreciated getting some real information, and it's a good thing for CreditCon to be there because depending on where you get your info from, there's anywhere from 50,000 to 100,000 credit repair businesses in the U.S. and I mean, so few get to go to a place where they can learn how things really work, and have compliance people there, and have the CDIA there. Well, like, I don't think anybody from the CDIA is going to be there this year that I'm aware of, but there was last year, and yeah. And even though he's not a fan of these space, at least he was there. At least he was there to, answer some questions and have a presence. Um, and and I noticed that Julie's not going to be there from FICO this year. They got something else from FICO.
I think there are two people from FICO going.
Oh, are there? Okay.
I think so. I saw a couple people from FICO that were on the speaker's agenda.
I'll have to look again. Okay, very cool. Oh, I had a random question about FICO, and maybe this will interest somebody that's there. Kayvon, I won't put your question up. This is really not what we do. We don't teach people how to work the credit repair business. But if you want to learn, go to CreditCon. That's what we've been talking about for the last couple of minutes. Or look up CreditCon 2023 and Matt Leastro and the guys. If you want to learn how to do stuff right, that's a great place to start. Join the Occam group on Facebook. That's all about compliance and TSR and everything. So if you want to run a ship that's right, then you got to be in compliance, which unfortunately a lot of people in the space are not doing. But if you want to be one of the good actors in the business, you want to pay attention to what the regulations are. So John, I had this not really a debate, but more of a musing. I was explaining to somebody sort of the differences between generic FICO scores and industry specific FICO scores, and I was thinking about it for a second, and I had said, I don't know that the old FICO scores that are being used by FHFA right now, what's it, 2, 4, and 5? Is that what they're still using?
That's right.
And my speculation was, are those really industry specific scores in the sense? Right. My impression was, or my thought was like, well, no, they're not industry specific. They just happen to be the scores at the time. They're specific to the industry, not because they were built for it, just because that's what FHFA has mandated, and that's what we're stuck with.
No, there were industry specific scores from those three generations of FICO score. 2, 4, and 5 have their own bank card and auto version, just like all the other generations had them. But FHFA mandated the use of the generic version, which is why you just have FICO V2 and FICO 4 and FICO 5, just like you have FICO 8 and FICO 9. And
yeah.
But I mean, the only industries that are really heavy into those industry specific versions are auto and credit card, and auto is into it because they were forced into it. You can go online and look at there were well organized transitions or conversions of industry players off of generic versions of the score onto the auto version of the score. And you could find it I think the most recent one was like 2011, but 50,000 some odd auto players, including dealerships and financing sources, were in a synchronized manner, were basically migrated to the auto version of the score, essentially overnight. And that doesn't happen in any other industry. And clearly, FHFA or mortgage is the only industry where the lender is forced to use a specific generation of score, brand of score, variant of score. That doesn't exist anywhere else. The credit card issuer can choose to use whatever they want from whatever bureau they want. They can ignore it if they want. They can do whatever they want because they don't have an FHA kind of looming over them. By the way, have you heard that loan level. This is actually fairly new, but the best interest rates for mortgage lending uh, is changing, meaning that you had to have middle FICO 760 in order to earn the best interest rates.
Yeah.
That's changing to middle FICO 780.
Wow.
And yeah, and it's happening within the month. So it's not like,
Wow.
oh, in 2 years this is going to, no, this is happening like in the next few weeks. I'll try to find, actually I did an interview with a writer who writes for a mortgage industry reporter, and we were talking about it yesterday. And the way that these new guidelines work is the the terms for people who have lower credit scores, those aren't changing. So you don't have to have a higher or low score in order to get approved.
Yeah.
But if you want the best rates, then the minimum requirement is going to go up 20 points. And then the DTI requirements are also changing as well. So, but the way that if you look at it, it's the people who have the best scores that are really the ones being penalized. The people who have the lowest scores, they're really not changing anything for them. So,
Right. Yeah.
You're probably going to start hearing more and more about that. And it's unfortunate because going from a 760 to a 780, as a lot of the people watching us probably can attest, that's not as easy as going from a 580 to a 600 or a 600 to a 620, or 640 to a 660, because you have more upside with lower scores. You have more points on the table that you can kind of scoop up easily. Someone who has a 760, they're maxing out a lot of the metrics, and so there aren't as many points at play or in availability, if you will. So they can't just go and scoop up an extra 20 points just to get to that highest tier and get the best rate.
Right.
So it's almost oddly penalizing the lowest risk borrowers, which I'm sure there's a method for why they are choosing to do this. So
I'd be curious. Yeah. I mean, you really are sort of at that elite level when you're 740 and higher. Maybe, but to go from 740, 750 to 780, I mean, I don't know, maybe they're looking at, especially when you throw DTI into it, maybe they're just looking at people who carry lower credit card balances. Because if I'm a 760 and I've got somewhat decent history, I mean, if I have any opportunity to grab additional points, I have to pay down revolving credit. I mean, that's the only thing that I can think of.
Yeah, no, I mean,
if that's an option, assuming I have revolving credit.
Yeah, when you get to that level of score, it's not, hey, I need to get this charge off deleted. You don't have any charge off.
Right.
When you get to that level of score, it really is the credit card debt, right? Or this is something we talked about yesterday when I was doing this interview. Or it's the time and file issues.
Right. Exactly. So, the second one. Right.
So people who are younger, they're just simply not going to earn higher scores. That's just the nature of credit scoring. Is you're rewarded for having an older credit report. Well, if you're a younger person, you're not going to have an older credit report, which means that your score is capped lower than someone my age who's had credit for 3 decades, where my cap is higher. And so going from 760 to 780, you're looking for, wait a minute, okay, where are those points? And those points are going to be lowering credit card debt to get your utilization ratios lower, eliminating balances on credit cards because you're penalized for having too many accounts and balances, and increasing the average age of your trade. And unfortunately, the only way to increase the average age of your trade is to be an older person. And that's not really actionable. So it's not as simple as someone who's got 600 and really it's a payment history based problem versus someone who's a 760. It's really an issue having to do with other things that are less actionable.
Yeah, I wonder how that's going to play out when FHFA switches over to and VantageScore 4.0, where now you have that score threshold being lifted, but now you also have trended data.
That's right. And what happens when you what happens when you migrate to a newer score, and I'm talking FICO to FICO. No one's ever done any sort of analysis comparing FICO to VantageScore. There's non-compete problems with that, and so that's why you don't see those two scores, kind of being used as whipping boys against each other. But certainly FICO to FICO has been performed. And what you generally see when you go from a like FICO 8 to FICO 9 or FICO 9 to FICO 10, whenever you go to a new generation of the same score brand, you see a flattening of the distribution curve and an increase in the tails. So it's almost like someone came in and stepped on a hat that pushes down the middle of the hat and pops up the ends of the hat. What that means, for those of you who are not used to looking at distribution charts, is that means fewer people have scores in the meaty part of the curve, and more people have scores in the tails, meaning that the population of people who have higher scores is going to go up, and the population of people who have lower scores is going to go up, and the population of people who have scores in the middle is going to go down. And so what that's called a flattening, essentially a flattening of the distribution. And so why that happens and what that means is that the newer model is doing a better job of separating high-risk borrowers from low-risk borrowers, because it is rewarding low-risk borrowers with an even higher score, and it's penalizing high-risk borrowers with an even lower score. So this whole issue of 760 to 780, that is less of a problem for someone who is truly a low credit risk, because the new model is going to score them higher anyways, because that's what new models do. For someone who is a 760 but a riskier 760, their newer score is going to be lower, and so they're going to be even farther away from the magic. That doesn't mean you're going to get denied. It just means you may not qualify for the absolute best deal that some lender may be offering.
Well, if they're anticipating that change, of course they're putting that into effect a lot sooner than the what's that?
Way earlier. Yeah.
Like a year and a half, 2 years earlier than the implementation of 10T and Vantage Score 3.0 or 4.0. But I don't know, maybe it's just getting people used to the fact that they're going to see those swings on the up and the downside when those are implemented. But fascinating stuff. Okay, where are we? I think we're ready to call it a day. Yeah, almost 50 minutes. Okay, so everybody, thank you so much for
50 minutes on the internet.
It just flies by. All right, so everybody, thank you so much for joining me and John today. I appreciate it. John, thank you so much for the great answers, and we will meet again here in a couple of weeks.
Thank you. My pleasure, as always.